Happy Monday, everybody. I hope you had a great weekend. I hope everything is going well with you. The sun actually started to show itself here in Chicago a little bit, and we're actually supposed to see a little bit of that coming in the coming week, so I hope you are too. Today is Monday, November 1st, 2021, and this is your market update video. As we discussed last week, we had a huge week last week. We were in the heart of earnings season. Last week was one of the big weeks, but this week is not far behind. So we saw about 30% of the S&P 500 companies report earnings last week. We also saw about 30% of the Dow Industrial companies also reported. So those numbers don't even tell the stories. When you think of the names, Apple, Amazon, Microsoft, Google's parent company, Alphabet, GE, UPS, Caterpillar, Visa, MasterCard, Starbucks, ExxonMobil, Chevron too. So you can tell the who's who of U.S. companies that we know about. This week we'll see some more of those names. We'll see Clorox, Pfizer, T-Mobile, Zillow, CVS Health, MGM, Etsy, Moderna, Airbnb, Peloton, just to name a couple of those. Oh, and in case you're wondering about the Fed, we all are wondering about the Fed announcement that we've been waiting for will be on Wednesday. I personally don't think you're going to see any surprise, but maybe some repetition. We're going to see November start to the taper. We're going to see $15 billion a month announced, and we'll probably see the reminder that taper does not mean interest rates going up. So we'll continue to listen for keywords, supply chain, inflation, and of course, COVID, and what all of that will mean to the growth of the economy and in the company specifically as we come to the end of 2021. So since we turned the video on its head a little bit and we did a little bit of the preview instead of the review first, let's go back to last week and recap a little bit about what last week looked like. Monday, we saw continued momentum from the week before and sentiment was positive. The market looked forward to a good week of earnings. S&P 500 gained about 0.5%. Tuesday, the market was overall pretty quiet, but we did see a lot of noise. Monday, we were still pretty quiet, but we did see a lot of noise. When you consider that Hertz, the car rental company that during the pandemic actually declared bankruptcy, came out, ordered 100,000 Teslas, pushed Tesla into the $1 trillion club. The order from Hertz was about $4.2 billion if sold at list price, which we don't know if that's going to happen. But regardless, that announcement took Tesla stock up the equivalent of 2 times the entire value of Ford Motor Company. Is that justified? Not so sure. But positive earnings reports came out from UPS and GE on Tuesday. The other side of the coin from the fact that Facebook came out with soft earnings and their new name, of course, Meta, which a few of you have tried to explain that to me to no avail, but we'll see how that goes. Consumer confidence was up and bond yields were down. All that set up for another good day in the market. The S&P 500 was up 0.18%. It did close off its highs for the day. In keeping with the late day pullback on Tuesday, Wednesday was a pause. We saw some good earnings, some say great earnings from Microsoft, Google, Coke, Boeing, and McDonald's, but that was offset by some economic reports, mostly global economic reports, especially the abrupt end to quantitative easing of the Bank of Canada. And again, this is another key to the market to remember that market does not like surprises. I'm sure the Fed's going to take note of that. The S&P 500 was down about 0.5% on Wednesday. Thursday, we saw the rebound, as we've seen so many times. Jobless claims were at a new post-pandemic low, almost normalized. And that was offset by the lower than expected GDP print, but we kept moving up based on strong earnings. Ford, Caterpillar, Merck, all with strong showings. The S&P 500 was up almost 1% at the close. After the close, Apple and Amazon came out with earnings, and that big thud you heard was those earnings reports. They missed earnings and see how that played out. Stocks opened lower on Friday in reaction to that. Apple and Amazon, their disappointment. Supply chain was mentioned by both of them. As you may expect, by the end of the day, the last trading day of the month, the market sort of shrugged that off and closed higher for the day. The S&P 500 closed up 1.33% for the week. October was a pretty impressive month. The S&P 500 up 6.9%. The Dow Industrials, the worst of the bunch, was up 5.8%, and the Nasdaq was up 7.3%. All pretty impressive numbers. So just to wrap that up, what we started earlier, we're watching for this week and the list and another list of earnings. By the end of this week, we'll have answers to pretty much most of the questions that are that the market has right now. So at least the ones that we can get to now. So first, the Federal Reserve. As I've said, they hold if they hold to what they've been saying, they'll be announcing the taper of purchases beginning this month at the rate of $15 billion per month. Next, earnings. If we have, we'll have a good idea by the end of this week what 2022 earnings expectations should be. Right now, it's between $220 and $225 a share in the S&P 500. If that holds, then we'll see how that looks for the market. Finally, we should know by the end of the week what fiscal policy should look like. Recent moves indicate that the $1 to $3 trillion in spending should be passed without major tax changes. That is a positive for the market, and that will be a tailwind. So if all that happens, we should have more upside, even with the stretch valuations where they are today. A few more quick things to keep an eye on. Falling COVID rates. And of course, the first Friday of every month is Jobs Friday. So I don't think it'll overshadow all the other stuff that we've got going on this week, but you always have to watch out for a big surprise with the jobs numbers. So for now, stay nimble in this market. Use the move in the market to reevaluate where you should be from a risk scenario in your portfolio. Now's the time. We only have 2 months left to reshuffle your portfolio and set everything up, set up your investments and your plan properly, and of course, make any last minute tax changes. So come back on Friday for our planning video. Have a great week.